The Bank of England Governor Andrew Bailey has stated that gradual interest rate cuts are likely over the next year as the process of falling inflation is well embedded. He noted that while inflation may rise slightly above the target in the future, financial markets expect 4 rate cuts next year, as shown in the bank's latest economic forecasts. Regarding potential trade impacts under a possible return of Donald Trump, Bailey said the effects on inflation are complex and unpredictable, depending on trade prices, reactions from other countries, and exchange rates. Russia's finance ministry has announced plans to increase deferred foreign currency and gold purchases over the next 6 weeks. The central bank halted foreign currency purchases last week to stabilize the ruble, which had dropped to multi-month lows. The deferred purchases totaling 114.4 billion rubles from December 6th to January the 14th will be carried out next year, with the central bank deciding the timing and method of resumption. Russian President Vladimir Putin has called for the government and central bank to coordinate their efforts to curb high inflation. Putin, addressing the annual Russia Calling Forum, stressed that boosting the supply of goods and services to match demand is key to controlling inflation. Highlighting the need to tackle the current inflation rate, he called for coordinated action between the government and the Bank of Russia, describing this as a direct mandate rather than a mere recommendation. And data from the Australian Bureau of Statistics showed that Australia's economy grew by 0.3% in the third quarter. Australia's gross domestic product grew 0.8% year on year. This marked the slowest annual growth since late 2020. Government spending contributed 0.6% to growth, while household spending remained flat despite rising incomes. The Reserve Bank of Australia had anticipated a 1.5% growth by year-end, expecting tax cuts and stable interest rates to boost consumer confidence. And in the MENA region, Prime Minister Mustafa Madbouli has witnessed the signing of a significant investment agreement by Nissan Egypt to manufacture a third vehicle model locally at its plant. Nissan Egypt has allocated $40 million to the project, with an additional $2 million investment to increase the production capacity of its 3 models to exceed 30,000 cars annually by 2025. The new model will be manufactured with a local component ratio exceeding 54%, aligning with efforts to boost domestic production in Egypt. Abu Dhabi, aiming to diversify its economy beyond oil, has introduced the Abu Dhabi Registration Authority to streamline business registration. This new centralized authority, part of the Department of Economic Development, will simplify processes for businesses and ensure compliance with UAE and international regulations. Abu Dhabi, which holds over 90% of the UAE's oil reserves, is focusing on expanding sectors like tourism, logistics, and manufacturing to secure future economic growth amid global efforts to reduce reliance on fossil fuels. Norway's sovereign wealth fund, the world's largest, has divested its entire stake in Bezeq, Israel's largest telecoms provider, due to the company's role in providing telecom services to Israeli settlements in the occupied West Bank. The decision follows a new, stricter interpretation of ethics standards by the fund's ethics watchdog, the Council on Ethics. Bezeq's involvement in the expansion of Israeli settlements, which are deemed illegal under international law, led to the recommendation for divestment, and the Council on Ethics stated that Bezeq's services to settlements contribute to violations of international law. British Prime Minister Keir Starmer has announced a $1.3 billion green energy investment from Qatar during a session in Parliament. The funds will be directed towards climate technology in the UK, with engineering giant Rolls-Royce set to receive some of the investment to support its energy transition efforts. The UK is keen to strengthen its relationship with the affluent Gulf nation, with Starmer aiming to secure tangible benefits in areas such as security and economy.